Okay, let's do this. This is the post-market wrap-up for Tuesday, March 17th, 2020 on metals, markets, and money. All right, so let's talk about gold first. Gold had a pretty good day today. It got as high as 1553-ish and then backed off a little bit. Showed some strength there. A couple times it popped up and came back down, but it didn't go down much into the 1520s after it got up. So we're going to see how this plays out. Gold looking fairly strong at this point, but again, anything can happen in these markets, as we all know. Silver, let's take a look at. Silver got beat up again. As a matter of fact, I want to go to the something interesting I think happened in silver today that I want to show you. If you look at the 1 minute chart, let's see. You can see that had these piercing downward, okay? And both times that it shot down, it shot right back up here and then here and then here, and then it kind of held steady. I kind of thought that was some strange price action. Not sure what to make of it. There was obviously some sellers there for a second, but there were some buyers that came in right away and bought it up. So, has silver hit that bottom? I don't know. Sometimes when you see spike downs and then spikes back up, you might want to think that there's buyers down there and the bottom is in. Who knows? Some strange thing happened with some options. I was looking at lost to 30% for absolutely no reason on some call options, but then they came back, and we're talking 20 cents difference on the price of silver. So I thought that was kind of strange. So nevertheless, platinum had a down day and palladium was up. Palladium market I don't keep too much track of either. It's just it was just the irregularities of that market was just too much. So it's not really dictated by normal market price action. So there's your metals. Let's take a look at the markets here. I'm sorry. Before we do the markets, let's take a look at the gold-silver ratio. I like to look at that every day too. Still hanging tough up at 120. Whether or not, you're looking at a loaded spring right here. Can it go up higher? Absolutely, it can go up higher. But, the higher it goes, the more it's going to want to revert back to its mean. It will revert back to its mean. Everything does. So let's take a look here at, let's see here. I apologize. I've been having a little bit of internet glitches. All right, so the markets were up considerably. We're looking at 735 here on the Dow. It's just now coming in at the end of the day. 3.65%, 4.6% on the S&P, and 5% on the Nasdaq. The DAX in Germany came up. Nikkei's up. Shanghai's down. UK's up. Hong Kong's up. So across the board, equities did pretty good, and so did gold, which was, I can't be 100% sure what that is telling us, but that almost makes me think gold might have found a bottom as well. So let's take a look at the next. Let's take a look at the money here. The 10-year Treasury got up over 1% today. This is a pretty big gain, which is you could see last week there was a correlation between the Treasury market and equities. It seemed like when the Treasury market got smacked down, the equity markets got smacked down with it. But now you're seeing a different effect, and I think that might be because money is coming from the treasuries and back into the stock market. So you'll see the treasury prices going down and the yield going up as money goes into the equity markets. So it could be a reason why you're seeing that kind of price action between the two. There can at times be correlations between the treasury and and the equities, as a matter of fact, there usually is, but it's just a matter of how strong that correlation is. Real quick here, I wanna go into something else that I think we should probably start covering here, and that is Euro dollar. Euro US dollar has come down quite a bit over the past few days. From what I'm reading, this has a lot to do with the so-called dollar shortage that's going on. It doesn't matter what the Fed tries to do. It's creating a dollar shortage every time they try to make a move. But we can real quick look into the index again. It's back up to 99. Crazy hard to believe that the U.S. dollar is sitting this high at the index. It's obviously the best looking horse at the glue factory right now. Everybody's printing. Everybody is just throwing money at this problem left and right. So the currencies will probably, looks like they're all going to go down together against hard assets. Will probably be what happens. And speaking of, let's take a quick look at oil too and see what that did, because oil has a lot to do with these markets. So oil's getting pounded. Okay, oil is down to 27. Had a huge down day. Wow, that's a pretty big. I'm surprised that the equities market didn't go down on that news. Maybe it's all bad newsed out. You know what I mean? And it's just it was quite possibly in an oversold situation. Could be why you're seeing something like that. Real quick here, let's talk about some of the news that hit the wires today. This is important stuff. Lehman playbook here from Zero Hedge. Fed announces bailout of commercial paper market. Okay, so this is all kinds of stuff. They're going to be bailing out loans and stuff. This should be dollar negative, but obviously the dollar increased today. So whenever you talk about printing, you would think it would be dollar negative, but it's not. That's what you get, that kind of stuff in these types of markets. Another piece of news that came out of Zero Hedge was 1.2 trillion stimulus package. Like I said before, you are going to see a ton of this stuff coming. This is all going to be eventually dollar negative, metals positive. How it's going to react on the equities market, I don't know. It's kind of hard to say at this point. Eventually, they'll drag it up with inflation, I would think. Like I said before, I really think the Fed is going to inflate their way out of this. They are not going to allow a crash to happen. As a matter of fact, the last few Fed chairs have outwardly stated that they would not allow a crash ever since Bernanke and his helicopter money comment back at the end of 2008, early 2009. But yeah, just keep an eye on this. And again, just like my video this morning, keep a close eye on the corporate bond ratings. Whenever you hear something about that, this is going to be the the 700-pound gorilla in the corner of the room that starts breaking furniture. And when he gets going, run for the hills. Like the saying, you don't have to be faster than the bear. You just have to be faster than the slowest person in the vicinity of the bear. But that's not very nice. We're not like that. So that's it for today. Again, this is a new channel. I'm going to be trying to do this stuff. Give people quick updates on stuff. Not too much, just enough for the average person to handle. And hopefully you guys like it. Please comment, please share, subscribe, all that stuff. I'd love to grow this channel. I'd love to put some more time in this. I'd love to have a good reason to. Because the world needs another jackass sitting behind his laptop telling you what's going on. All right? Take care.